Hello, Santa Barbara. My name is John Gilkison with the Zia Group Real Estate Team, and I'm here to give you a market update for South Santa Barbara County real estate. Well, what a crazy year it has been. The market was extremely active. You're going to hear the term the greatest real estate market of all time, not just in Santa Barbara, but across the country. So first, I'll show you what happened in 2020, what's happening now, and then I'll give you my predictions for what lays ahead in 2021. So let's dive into the stats so you can see the live data. I'm going to share my screen here with you guys. All right. So as you can see here, Zia Group compiled a comprehensive breakdown of the annual price trends dating back to, I mean, you'll see in this graph here back to 1990. So we can just get a great look at how this market compares to previous markets. Let's start here. You'll see at the top of the screen, we had a total of 2,118 total sales in South Santa Barbara County. That's a 9% annual increase over last year, which just shows how many more homes were sold over the year. But what's crazy, and a statistic that we aren't showing here, is something called the absorption rate, which is probably one of the most important, probably the number one factor we look at when determining what's happening in this market. And the absorption rate is how many months of inventory are for sale, and how long would it take for that inventory to sell out. So for example, if there were 300 homes on the market, on average 100 homes sell per month, you would have 3 months of inventory. So you'd have an absorption rate of 3 months. Right now, well, let me start with a healthy market is typically somewhere in kind of that 4 to 6 months of inventory. Anything under 4 months is considered a seller's market. Anything over 6 months is considered a buyer's market. Right now, we're tracking at about let me check my notes here. It's 1.6 months of inventory. 2 years ago, at this time, we were at about 4 months of inventory. Last year, we were at 3.25 months. So what that tells us is there's an extreme demand, and there's not enough inventory to keep up with the demand. And so that's one of the things that's causing this fast-paced market and causing median prices to jump up, which we'll get to in a minute here. So jumping to the next statistic here, there was a total of 1,494 home sales. So that was a 14% increase for single-family homes. And you'll notice here, there was a 2% decrease on condos. And so interesting. Why is that? Well, a lot of that probably has to do with COVID. People are trending right now wanting larger homes, more outdoor space, since a lot of the public places are closed right now. And so condos have become a little less desirable, and single family homes have become much more desirable, especially in more like suburban areas. We'll dive more into that in a bit here. I want to show you, because this is so important, what's happening right now with median and average prices. Typically in Santa Barbara, and in a lot of markets, in fact, people tend to look at median price as a better indication of value versus average price. And the reason being is because average prices can be significantly skewed by let's say we have a $15, $20, $25 million sale, that can dramatically skew prices upwards. And so you'll notice average prices tend to be much higher than median prices. And so we look at median more as kind of a true indication. But looking at the statistics here, average prices went up 25% in Santa Barbara. They're up to 1,995,000, and you'll see that jump that we had here. So that was a 25% increase. And then looking at median prices, still a big jump at 17% from 2019 to 2020. And so we're tracking at median prices at 1.2 million right now, which these set an all-time high record for Santa Barbara, outpacing the previous record in 2006. Yearly home sales for Santa Barbara, we kind of talked about it. There was a huge jump in 2020. You'll see going back to 2013, we haven't seen anything like this in quite a while. So 9% increase from 2019. We talked about the difference between single family and condos. But once again, showing just even with the limited inventory that we have, stuff's moving quickly and it's moving often. 2020 home sales by month for Santa Barbara, and this is great. I like this graph because it shows what happened over 2020. You'll see when COVID hit in March, the market went dead. Nobody was doing anything. Everyone was wanting to see what was going to happen. So there were hardly any sales in the month of April, May, and then lockdown restrictions got lifted in June. And lo and behold, what happened is people were realizing, hey, we have a significant lifestyle change now. We don't know how long this is going to last for. We can now work from home. We're not required to now be in the city that our job is at. So we can be more mobile. We can move to the suburbs. I can work from home there. I need a home office now, or the kids need extra space for teaching them at home, or bigger backyard space. And so that was the catalyst to creating a lot of activity. And you'll see here, it just incrementally went up from June to about September, October time period. And even November, December, which traditionally are slower times in the market, when the winter market, still we saw a lot of sales that occurred in those months. In fact, let's compare it to 2019, 18, and 17 here. You'll see these were the trends here kind of in 17, 18, and 19. So a lot of activity happening in the back half of 2020. Now, I think that's the important stuff that I want to go over. I mentioned that I would talk about some of my predictions. So I'll stop sharing the screen here if I can figure it out. Let's see. All right. So predictions for 2021. Now, I will say, I oftentimes have people asking me, are we in another bubble here? Is this going to be like 2008? And what I can tell you, because people are kind of, I get it, as home buyers, people are telling me, hey, I want to wait for the market to crash. When is that going to happen? And what I can honestly, genuinely say is we are in a completely different market right now, different economy than in 2008. For a couple different reasons. Number one, we don't have those stated income loans where there was no qualifying assets, no qualifying income, low regulation. So the lending market is so regulated now that a lot of those bad loans and faulty loans, they don't exist anymore. Another huge factor were those those ARM loans, adjustable rate mortgage loans. And those were a huge part of the lending industry back in 2008, where about, I think it was about 48%, so close to 50% of the loans then had those adjustable rates on them, meaning after typically 3, 5, 7 years, it went from a fixed rate to an adjustable rate, where now you're paying a much higher interest rate. People could no longer then afford to pay their mortgage and were getting foreclosed on, which was another huge impact on the market back then. And the last thing I'll mention too is, remember, we just talked about how strong this market is. And we saw 17% increase in median prices last year. So guess what's happening? People have a ton of equity in their home. And so rather than, if they can't afford to make the payments anymore, rather than foreclose on their property and give it back to the bank, they're just going to put it on the market because they've got so much appreciation and equity on it that they can now sell it and oftentimes make a profit on it. And so those were some huge factors that caused the bubble to burst, as people like to say, and we're just not seeing any of that in today's market. I just yesterday listened to a great seminar put on by the California Association of Realtors, and they had state economists on the call, and everyone seemed to have a very positive outlook on 2021. By no means predicting huge, double-digit growth like we saw this year, but the theme or the message that I will leave you with is be optimistic with 2021, but also be cautious, because there are still things to be determined from a lot of the economic bailouts that occurred throughout 2020. It's still too soon to tell how those are going to be effective, or how those are going to affect the upcoming economy. So while we still have a positive outlook on 2021 for all the reasons that I just mentioned, there's always that, be cautious outlook as well. One last thing that I forgot to mention too, that I think is very important and it's helping to drive the economy, is the current day interest rates. They are at really historic lows. I just saw a lender post his 30-day fixed mortgage rate amounts, and they were coming out at 2.875. I've had clients lock them in as low as 2.75, and they seem to be, that's really unheard of for anyone that's locked in a 30-year fixed rate. That is just hard to beat that. So moral of the story is lock in these great rates while you can, because those will last for the full 30 years. And it'll be interesting to see how much this market can keep going. I'm going to share my screen one more time because I want you guys to see this. I want you to see this graph here that I think is a telling sign. It's so hard to predict data and predict where the market's going, but what we can do is look at the past trends to predict the future trends. And so once again, I'll leave you with this. Look at the trend here from 2013, 14 to 2020. It almost looks identical to 1998 to 2004 or 5. And you'll see here between 2002 to 2003, that looks like a pretty similar jump from 19 to 20. And look what happened here the next couple of years. We still saw about 4 years of growth. So, looking at past history, there certainly could be some growth that we'll see in the upcoming years. Like I said, it seems like all the economists that I'm hearing from are having a positive outlook on 2021. Hopefully this information was helpful. I'm going to stop sharing my screen. Once again, my name's John Gilkison with the Zia Group real estate team in Santa Barbara. I geek out on this stuff, so feel free to reach out to me if you have any questions. Would be happy to help you with your real estate needs in 2021, and hope you got some value from this. Take care.